to Garshom TV's Market Beat with me, your host, Swain. Market Beat is a show aimed for investors and business people keen to learn more about the financial markets. 2016, not only do we see Brexit, but as a result the falling pound, and then the small matter of the US election. So to help clear things up, we've got a special edition today as we're joined by expert and financial analyst, Mr. Bijesh Babu, Director of Ganita Wealth. Welcome Bijesh, how are you?
Good, I'm good. Thanks for having me here.
Bijesh, I think you'll agree 2016 has been pretty eventful. Not the easiest of tasks to get us started, but I was hoping you could clear up this mess a little bit. Give us your summary of the year.
See, Ben, 2016 has been a very eventful and exciting year. Now, the first two quarters, what we had was the markets were troubled by the slowing growth worries of China and the falling oil prices. And the quarters after that, the markets had to face the uncertainty over Brexit and the US presidential elections. Now, overall, I would say it was a mixed bag. Yeah.
You mentioned Brexit. We've got to talk about it because it's causing huge concern up and down Britain. Do you agree with a certain section of the population that this might actually be game over?
See, political uncertainties are very hard to predict. To be honest, we don't really know if the markets have evened out or it will continue to show the consequences of Brexit. Now, unless we see a clear and concrete plan from the government on Brexit, we can't say anything for sure. And so regardless if it's a positive or a negative development as a result of Brexit, we can see that's directly linked to the British pound. For instance, since the announcement of the Brexit referendum, we had the pound sterling dropping 20% against the major currencies, especially the dollar. Now, obviously there's a huge correlation there. Above all of this, basically, I would certainly say that any consequence as a result of Brexit is here to stay in the British economy for a long period of time.
Interesting. So, as you just said there, if we are to expect to be stuck with Brexit for the coming years, you mentioned the correlation between the falling pound and Brexit. It's clear to see. So, is the falling pound, is that going to continue? Is that going to drop even further coming near future?
It's highly unlikely, I would say. You can't rule out any short-term volatility, and in the long run, I would expect the pound to gain strength against the other, major currencies in the global economy. And once you see inflation starts picking up, then you can definitely see the pound gaining strength against other currencies.
Just on inflation, I think the main concern, especially for the viewers at home, what they're going to be asking is how are they going to handle inflation?
See, inflation is certain. Now, you would see the cost of basic essentials like food and clothes, etc. Rising accordingly. Now, one thing that's positive for the British economy is the fact that the government has left a lot of these benefits and tax credits unchanged till 2020. And now this will lower the impact of inflation on these household incomes.
But just on investments, I think that's the key issue on everyone's mind. Yeah, how are we going to handle that?
Yeah, to be wise, I would say you have to invest in other currency investments, especially if you take, for instance, a dollar fund. What it does is basically it balances your portfolio and it reduces the risk against major events in the UK as well.
Interesting, Bijesh. We do know that, obviously, of the Bank of England's role in stabilising the sterling. I was just hoping that you could clear up, maybe give us your opinion on the Bank of England's monetary easing policy, and then state whether you yourself think that this is something that's going to continue.
See, the monetary easing policy was introduced by the Bank of England back in 2008 when the financial crisis was at its peak. Back then, it was a huge relief and it brought liquidity into the global markets. But I wouldn't imagine it to continue forever, and I would expect it to end towards the end of 2017.
Okay, Bijesh, if I may, I've got to ask about the US presidency. I've got to ask Donald Trump.
Yeah.
Not everyone's preferred candidate. I think we can say that. So, what is his election gonna? What's the effect going to be? And not just on the financial markets, but on the global economy as well.
Yes, definitely. We'll have to speak about Mr. Trump. It's too hard to predict, and it's too early to predict anything about Mr. Trump. But one thing is basically what we observe is Mr. Trump is facing disagreements within America and internationally. And the other fact is basically Mr. Trump is set out to defy conventions. So he is bringing out new appointments, which is shaking traditions within the United States, but all this set aside, U.S. dollar is set to rise, and definitely the U.S. inflation is on the high as well. So overall, it's a positive sign for the global economy, because if the U.S. economy is getting better, it's automatically a good thing for the global economy.
Right, Bijesh, it's not just the US that are stuck with Trump. Obviously, that affects Europe as well. So, what's your opinion then on the European economy? I mean, they've had their own turmoils and worries.
See, Europe has had many elections, lined up for next year, basically. So now the elections which is coming up are for the countries like Netherlands, France, and Germany, and so you definitely have some political uncertainty, which is in Europe at the minute. And moreover, what we have found out is recently there is a lot of anti-Europe sentiments on the rise. Even there are threats of referendum, like the ones which we had for Brexit. So we might have these kind of referendums against remaining or leaving within the EU for these countries, basically. So again, you're adding that to the political uncertainty. Now the main challenges for Europe, I would say, are the slow growing economies and the no profits growth from companies. These are the main challenges for Europe. And as an investor, I would stay away from Europe for at least the next few years.
Okay, it certainly does look challenging, very interesting. But Bijesh, give us some hope. What about Britain? Can we say the same here? What's your opinion on Britain's economic outlook?
See, the outlook for Britain looks very positive, and it is very bright. Even though we are experiencing some mess because of this Brexit. Now, in the long run, I would I would back England as a very fundamentally strong economy. Currently, the or the unemployment rate stands at 4.8%. It's a low interest rate environment, and low corporation taxes as well, and above all, basically, government is spending hugely on infrastructure. So these are all positive signals for the British economy. Now, but you have to think, you have to view this as with a long-term view, so that you can see the country performing better.
Well, Bijesh, I know I'm happy to hear you pick out the positives. I know the viewers at home will be. If there are going to be positives, as you mentioned, then surely certain sectors, certain industries will perform. I was hoping you could clarify from yourself which ones will perform, then which ones maybe will fall short, won't be performing, and then just finally, is there any specific sector that is your favourite, basically?
See, performance-wise and growth-wise, I would say the retail sector should be the main pick for us. And inflation is one of the main drivers behind the growth of this sector for next year. Now, one stock that I would particularly like to pick out is Tesco, because they have had their issues and they're on their recovery mode, and they will outperform next year. The second sector I would like to get your attention on is basically the telecom sector. So shares like British Telecom would definitely perform next year. And the third one I would say is basically the property development sector. So you will see companies like Land Securities, British Land, and Barratt Home Developments performing.
That's all good. I think the more pressing issue, especially for our viewers, is which companies are going to fall short. I think which ones can you see you're not confident in that are going to perform so well.
I can narrow down the sectors for you. So facing I would not bet or count on banking, oil and commodity sectors basically. So for a start, I would say banking is having issues with the regulatory pressures, competition, and even the Brexit is also affecting to an extent. The second one would commodities. Now you would see an increase, a rise in the dollar value, which will drive down the value of commodities, and you can see those shares underperforming next year. And oil again, they've been struggling for the last 2 years basically, so I don't need to explain any further to you.
The banks have certainly been in the spotlight. Yourself, would you go as far though as to say that there's a crisis here on our hands? Maybe even go as far as say a Lehman Brothers style collapse prediction in the future?
It's highly unlikely, I would say. Even though these banks are not performing or not generating any real profits since the economic crisis, I wouldn't rule out the possibility of any mergers or buyouts between these banks and building societies. Yeah.
Something I have picked up on, that when uncertain events do happen, the popularity in gold rises. Is this something I should be seeing? Why is this happening?
So it's back down to the basics. Now, the fundamental factor in determining asset prices is demand and supply. Yeah. The US dollar is on the rise now, and what you would see is, as I mentioned earlier, that US dollar will drive down, the rise in US dollar will drive down the value of gold and commodities. So you have an inverse relationship there. Now, when we take a 5-year investment horizon, I wouldn't expect gold to be a good investment.
We've mentioned 2016, Bijesh. We know how eventful that has been, how uncertain that has been. Going into 2017, is it going to be the same story? If it is, then what are the main risks going to be for the year ahead?
Element of risk is always there in any market. And I would stress this word, effective planning is a very crucial factor when it comes to risk management and investments. If you're willing to plan in advance and, try to understand your risk tolerance or risk appetite, then there is definitely a potential reward within the market for you. And the key, it's basics, diversification and hedging against unwanted risks would minimize the losses in investments.
Okay. Yeah. If I may, Bijesh, let's go east. The emerging markets, especially if we talk about investments. India, do you see here more risk or more opportunities?
It's definitely opportunities. Yeah. So basically, India. Now you might be seeing that India is trying to balance its growth with its economic reforms, but I would say the demand is stable, and there is opportunities in large cap stocks, especially the sectors like healthcare, travel and tourism, and affordable houses and entertainment. Now, if you want share picks, basically, I would say for the first part, it would be, for the healthcare, I would say Oro Pharma will be a good pick. And for the travel and tourism sector, I would say it's Cox and Kings. And then for the affordable houses and entertainment, I would say I would pick Wonderla So these are my picks for Indian stocks, and there is definitely a lot of potential in the Indian equities to achieve a lot.
Okay, interesting, Bijesh. If I may, I was going to press you one last question, because I'm sure it will be on everybody's mind. What's the comparison for yourself between the British sterling and then the Indian rupee?
So yeah, as I've already mentioned, there is a very positive outlook for the pound. Now, even though we are experiencing this issue with Brexit and all the pound lowering value, unless when we start seeing a concrete plan from the government on Brexit, then we'll definitely see the pound, starting to gain value or get a better direction. So the outlook is positive for the pound. And again, once inflation also starts picking up, then you will definitely see the pound gaining value. It's very contrary for the Indian rupee. So what we have here is basically in the Indian rupee, the Reserve Bank of India, are quite keen on cutting the rates, the interest rates. So basically that will bring down the value of the rupee. So when you talk about in terms of conversion rates, basically I would say GBP INR 92 will be the topmost range, and the lowest range would be 86. So GBP versus INR will still range between 86 to 92 next year. Okay,
it's certainly interesting, Bijesh. I think we can tell that 2016 certainly, but you can relax now, Bijesh. Thank you. I'd thank you for your time.
Thanks for having me.
Good luck to yourself and Ganita well for the future.
Thank you.
So that concludes the show. We hope you have found it very insightful. Any queries or suggestions, please feel free to email us at marketbeat@garshomtv.com. Be sure to join us next time when throughout the year, I'll be joined by more experts in the financial market. Until then, I've been Ben Swain. This has been Market Beat. Thank you for watching. Happy New Year and goodbye.